Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Welcome to the COT report webinar. I'm excited to talk about the COT report tonight. Got a lot of fun things going on with the COT report right now. Obviously, we've made some cool updates that I think you guys are going to love, or reshare, I guess, if you already know about some of the updates that we've made recently. Really excited to get into this. So, before we get started, let me go over a disclaimer. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So also, I just want to welcome all those that are new with us to the program. Excited that we'd have you guys here. If you have questions throughout the webinar, feel free to ask those questions in the comments or in the chat box. If you're watching this in the recording, feel free to ask those questions in the comment section down below. All right, guys. So let's jump into the COT report. So first of all, let me just spend, for those of you that are new to the program, let me just tell you what the COT report is, but then the rest of the time, I do want to spend some time jumping into the commercial shift and some of the things that we're doing there, the back testing of the commercial shift and all the other things that you guys are that you're probably here for. So want to make sure that we go over that, but I also don't want to leave the new guys in the dust. So for those of you that are brand new to the program or you're watching this in the recording, basically what the COT report is it stands for Commitment of Traders. It comes from the CFTC.gov website. So if you go to CFTC.gov, this is a government regulatory authority here in the United States. And what they do is they regulate the commodities and futures market. One of the things that they do every weekend is they release this Commitment of Traders report, which is used far and wide. It's actually a free report. You don't have to pay for it. And anybody, anywhere with an internet access can access this report. It comes out every Friday at 4 p.m. Eastern. You just come in here, and these are all the different COT reports. So we use a couple of reports in here. We like to use this financial futures report when we're looking at the leverage funds trades. And then when we're looking at the commercial and non-commercial positions, we click on this short format with the Chicago Mercantile Exchange. So if you click on it, this is the most current COT report. This is what it looks like. It's actually a pretty boring little report, but it is absolute gold. Absolute gold. I love this little report. Been using it for years. I've known about the COT report for practically a decade now, but I haven't really used it. I guess for me, I started using it about 3 or 4 years ago in my trading, and every year that I've used it, I've just leveled up the way that I use it, and I've gotten better and better at with how it works, and I'm actually constantly learning new things about the COT report all the time, which is pretty awesome. And we're going to talk about some of those new recent things, especially some of the things that we've implemented into our trades this week, last week, and the week before. So that's what it is. It's a report that shows you how many institutions, not necessarily institutions, but how many long positions and short positions are held by different institutions. So you have the non-commercial side of the market, you have the commercial side of the market, and then there's some non-reportables as well. We don't really look at those, but you have the non-commercial side and commercial side. Basically, these are the non-commercial side is your big banks that trade to speculate. These are also known as large speculators. Then you have the commercial side of the market, which is these are hedge funds and also multinational corporations that use the futures market with the purpose of hedging off inventory and currency risk in other countries. So if you're a company like Walmart, Costco, or McDonald's, and you have stores and inventories and you offer services in other countries, you have to have large holdings of currency in said countries. And so one of the things that they do is they actually hedge off risk um, by using in the currency market, um, or currencies and specifically the futures market, um, to hedge off that risk. So anyway, that's what commercial is. And then non-commercial, like I said, are your speculators. Okay. This is actually a good point for me to jump into this part. So one of the things that I have been studying over the last month or so, maybe a couple of months, is I've been really diving into the difference between these two. So this is probably a good point to bring this up. So hopefully that's at least a good enough short introduction for those of you that are kind of new to the program. I do have other more basic COT report webinars. So if you do have questions, I actually have a basic training COT report webinar. If you go to the basic training and want to read more about the COT report, watch more about the COT report, there is a more basic video about the COT report there that you can watch. And I do have countless other videos I can send you to. But today I just want to kind of dive into a little bit more of some of our updates and what we're doing with the COT report and the back testing of the COT report. So that's going to be more the focus today. Okay. So like I said, let's jump into this. So like I said, I've been really diving into these two in the legacy report for the CME. And one of the things that I've discovered, and the back test has really proven this to be true, is that although the non-commercial side, they are the big speculators and they are usually right about the direction of the market, they're often wrong week to week. So they're right about the overall direction. So like right now, okay, let's find like the euro or the Japanese yen. Actually, let's go to Japanese yen. Here's the Japanese yen, right? Where has the Japanese yen been going? You guys tell me. Anybody want to, and who's been following the market pretty extensively? Where has the Japanese yen been going over the last just 6 months, 8 months, 9 months? Where's the Japanese yen been going? Up or down? You guys tell me. Where has the Japanese yen been going? Okay. It's been up or down. I guess it's been both ways, right? But generally, which way has been going? Yeah, down, down, exactly. You guys commented. Okay, yep, it's been going down. Big time. Big time. Okay. There's a lot of reasons for this. You could mostly has to do with the Japanese bond market and the central bank in Japan is in a pickle right now between whether or not they raise rates and lower rates. And they're playing cat and mouse with the private side of the market. It's yeah, it's a big deal, and as a result, the Japanese yen has been getting crushed recently. So this is where non-commercial is on the Japanese yen. They are shorting the Japanese yen. You can see there's 135,000 contracts short on the Japanese yen and 33,000 contracts long. So obviously they're betting to the downside on the Japanese yen. The commercial side is basically the opposite. So you'll notice here commercial has 193,000 contracts long, which is a ton. And they've got about 81,000 contracts short on the commercial side. Okay. So obviously commercial is basically the opposite of non-commercial. So one of the things, like I was saying, I discovered is non-commercial is usually right about the market from a holistic perspective, more of a like a longer term perspective. So if you're willing to hold trades for months at a time, uh, yeah, months at a time, weeks at a time, usually non-commercial is who you want to follow. However, one of the things that I've discovered recently, and I've watched a lot of other people who trade the COT report do this very thing, and who have been doing it for decades. What they do is they follow commercials that in the subsequent shift week to week. So usually what that means is when non-commercial is making a move, when they're trying to build into a position, they're usually wrong about the most immediate move. So if non-commercial starts flipping into a buy or they start flipping into a sell, the market will actually go against them for several weeks and then they'll get their way with the market later on. So it's more of a longer term view of the market, but the commercial side is absolutely the side you want to follow from a week to week perspective, which matches more the type of trading style that you and I have. What type of trading style is that? So you and I, what are we trying to do? We're trying to create income. We're trying to extract money out of this market, right? So that we can improve our lives and just make more money, right? So that doesn't really help you or me a lot if we know where the market's going in a month or in 6 months, because we're looking to make money tomorrow. We're looking to make money this week, especially this week or this month, right? So knowing non-commercial is good, but is it actually that helpful for me taking a trade tonight or this week? Not as much. So, however, when non-commercial starts to flip out of these positions, when they start to, add longs and go short, that is the direction where they're moving towards, and eventually they're going to get it right. But in the meantime, for the most immediate move, they're typically wrong, and it's uncanny how accurate, well, how I guess how inaccurate non-commercial is because uh, while they're making that move, there's extremely inaccurate with the direction of the market. But subsequently, the commercial side happens to be very accurate at picking the direction of the market for the coming week or the coming couple of weeks as far as the shift goes. So if you're looking at just, right here, you can see they added more yen this week. They also added some more shorts on the commercial side as well, but there was a net long, so it means they're buying a little bit more yen this week than usual. So what would you expect this week based off of that? Perhaps maybe the yen would actually go up because you would actually see you're actually seeing commercials go a little bit more long. Now that's just a first assumption. Now I don't know if that's actually been happening. It's not a I have actually haven't been doing a lot of trades with the yen this week, so I couldn't tell you. Um, but that's kind of what you're looking at. Let's see if we can find another one. Like what's one that has been? Is it like the franc? Is this one that's been good? Um, yeah, I was like over here, the Swiss franc, you have an addition right here. This is the change in position. So they added the commercial side added long positions, as you can see here. They added longs and they also took away shorts. So when that happens, again, you're trying to follow that subsequent shift. So this week would be a week where you're potentially um, buying Swiss franc. Okay. Okay, let's continue on here. So let's go to the journal. So what I do every week is I go into the journal. I've been adding all data right here in the comprehensive COT journal. So at the very top here, um, so at the very top here, you've got um, the most recent data. This is the data right here. It's basically just these it's row 3 to row 13. So it's 10 rows is the data. Okay, so if you ever want to come in here and check it out, you can definitely come in here and check it out. And it's always going to be dated the most previous Tuesday of the week prior. So October 17th. So today is October 25th. So this is 8 days old technically, but it is the most recent report that we have. Okay. Um, and this report does come out every Friday, but it's always going to show the previous Tuesday's data. So technically, the CFTC is already in the process of making a new COT report for this weekend. It will be released on Friday, but we can't touch it till Friday. So even though there might be more fresh data, no one's going to be privy to that data until Friday, right? So we can't even make a trading decision until this weekend. And then this weekend, the market's not even open. So you have to wait till Sunday to actually make a trading decision based off of the new data. And then what I do here is I look at the changing contracts. So I'm looking at the change specifically, like I said, in commercials. So you can actually see right here, like with the Aussie, you can see the change is what page of the COT report is this? This is the comprehensive COT report. This is like the fourth sheet in on the COT journal. Yeah. So the first one is leverage funds. This is where we normally put in. We'll get to this one in a little bit, but the fourth sheet in, I believe, is the comprehensive one. So these are the changes in previous weeks, right? Oh, what page of the CFTC? Oh, I see. So this comes from, so here's the main page right here. Here's the home page. You go to COT and then you scroll down. You got the legacy reports here. We look at the short format of Chicago Mercantile. So right here, you click on that one, and that's going to have right here, all of the, this is the short format and it just basically shows non-commercial and commercial. Yep. Yep. That's where you find it. Okay. So back over here, so you got the change in contracts right here from the previous. In fact, I think if you click in that, yeah, it's basically this week's total contracts minus the previous week's total contracts, and that's what gives you this number right here. So you can see this week is 7,181 new long contracts, right? And here's the short contract. So, there was more interest in the Aussie this week as far as commercial goes, right? This next part is pretty significant because this is the net change. So this is basically taking the long minus the short, and then this is the net. So right here you have like the Aussie had a net change of 6,000 contracts to the long side. CAD had 1,600 contracts added. Um, Over here, the Euro had 3,300 contracts negative. Pound had minus 1,400 contracts negative, right? And then this is probably the most key information down here. So this is stuff that I've had to create. So I get the data, but then I have to do something with it, right? So I have to do something with this data. And it's actually been quite a bit of work to try to figure out how everything should be calculated. And I think you guys can actually come in here and see what I've done. So if you ever want to, I won't ever give this to somebody who's not in the group. So again, if you are watching this recording and you are not a member, if you want access to this, you would have to become a member. But I think if for those of you that are members, if you come in here, I believe it lets you actually click in here and see the calculations that I've made. So you can kind of get an idea of how I'm like my thought process just by clicking into each individual cell. Let me know if you can't do that. I think you should be able to do that though, if you're ever curious with how this is done. But basically, all of this was put together to get to this point right here, which is the percent net change. And the reason why we want a percent is because not every currency pair or currency is created equal. And we want to know how proportional is the net change. For example, so like if you look here, so you've got like the euro had minus 3,300 contracts. Well, that's a lot of contracts. But I believe this franc is more significant. Why is the franc more significant, even though it only added 1,500? Well, it's because the franc is only traded about 6 times, 7 times less than the euro. So adding 1,500 contracts on the franc is, to me, proportionally much more significant than reducing 3,300 contracts on the euro. So I had to go through that calculation in my head to make everything proportional so that we could actually get a percentage, right? It needed to be proportional is basically the answer. And that's where the magic happens right here. So each week we're trying to figure out, okay, what's the percent net change in each individual uh, currency that we're looking at, right? So you can actually see here the franc had almost a 3% increase in net positions, and the euro did have a little bit of it did dip a little, but it was not even a percent. It was 0.62 of a percent, even though it had a bigger contract change, because that 3,300 contracts proportional to how many contracts are outstanding is really not that much. But when you add 1,500 to the franc to an amount that is not already that much, and you add 1,500 to it, that's why it's 3%. I hope that makes sense. If not, come back and watch the recording. Hopefully that helps make more sense. So this is where the magic happens, because right here you're getting like this is all becoming a better picture. You're getting a better picture of what to expect in the market now for the coming week. So what we're identifying is we're saying, okay, the Aussie is looking solid. Okay, Aussie had a 3.2% increase. The pound is not looking that, as good. It had excuse me, I'm at the euro. Yeah, pound is my 0.62 negative. Euro is minus 0.37. Okay. Franc is looking a little bit better, had a 2.7% increase. Yen had a 2.25, but these seems to be the biggest ones. So like if you were to think about it this way, the pound had the biggest negative. Yeah, the biggest negative. I hope that makes sense. Yeah, the had the most notable negative that we had. There's actually only two currencies that experienced a negative, and that was the pound and the euro. And pound had the worst negative. And then the most positive was the Aussie, right? Aussie was positive. So you'd want to pin those two together. You'd want to say, okay, pound this week is going to go down, and Aussie this week is going to go up. So you pin those two together into the pound Aussie, and you'd be looking for shorts on the pound Aussie. And I believe it's actually done pretty good this week generally. I could be wrong, but I believe it's gone down this week. Let's pull it up. Yeah, I mean it did at one point. It's actually starting to come back up now, but like if you start the week here, this one started the week right here, went up a little bit, tanked a ton. It's actually come back up again. We'll see if it actually continues lower again. I believe it will go lower again, but for the moment, it's actually come back up for the time being. We'll see if Thursday and Friday sends that lower. Um, but this would technically be based off of the shift, the best thing to short this week. That was at least the case between Tuesday and Wednesday right here. Um, that was definitely the case. And again, I don't know if that's going to be the case throughout the rest of the week, but I assume it will. I'm assuming this will probably come down a little bit further. But like I said, we shall see. I don't know for sure about that. Okay, so that's basically what you're looking at. Okay, now let's go back to this. Another good option would be like, yeah, let's see. Trying to think like you take the franc against the pound. Is that right? Yeah, pound franc short because you'd sell the pound and then you would buy francs. So if you pin those two together, that would be selling pounds and buying franc, right? So you go over to the pound franc, and how is that one done? Definitely a lot better. It similar like the other one. This one actually came up at the start of the week, Monday, and then it finally pulled back pretty hard. And it appears to be continuing to pull back. We'll see if it actually continues lower, but this is another pretty good option to short this week. It is interesting, like I said, this market actually came up, kind of went counter to the signal, and then here we are Wednesday, finally doing what the signal said it was going to do. So nice. So you probably did pretty good on that, Roger, the pound franc and euro franc short on those sentiment trades. Um, I'm assuming you did well on those. Nice. Yeah, I think I took those trades too. And let me actually, I think I took, um, yeah, I've got NZD franc short, CAD franc short, pound franc short, pound Aussie is that other one I was in, euro franc. Yeah, these are all different trades I'm in right now. Okay. So you have those trades, and then let's go back to this. Um, oh, and the other thing I wanted to show you. So if you guys actually come into the journal here, I actually have been journalizing the top two trades of the week. So last week, the top two trades were actually, I haven't even put them in yet. Let's actually do it together real quick. So the top two trades last week were, if we come here, so this is the week of October 10th, which really means the following week after October 10th, because this is the data as of Tuesday, October 10th. So the following week would be the week you actually took those trades. So these are the top two trades. So let's look at this. You got NZD against franc and CAD. So these were the top two strong currencies. Yeah, NZD, franc, and CAD. So the number one was the NZD against the CAD. So if you had sold NZD CAD last week, that would have been the best shift trade. I actually wanted to do this with you guys. Let's go ahead and take that picture real quick. So let's go to the NZD CAD. Based off of this would have been the very best trade to take last week. And this is it. So the data was as of the Tuesday of October 10th, which is right here, which means you wouldn't have gotten that data until Friday over here. And then this is the trade. So from the start of the week to the end of the week, so from here to here, that's what you would have made. And that's based off of the top shift of the week. So from here to here, that's 87 pips. So I'm actually going to type that in real quick. That's plus 87 pips, NZD CAD. Yeah, I didn't, this is a short. Yeah. I wanted to take this picture and put it into the journal real quickly. Okay, let's go ahead and save that. Let's put it in our screenshots. NZD CAD. Okay. And let's go back over here. Let's go ahead and put that in right here. There it is. Okay, so put that in there. And let's do this last one for last week. Oops. Perfect. Okay, so in the last trade to take last week, so yeah, here we are, October 10th. So the weekend following October 10th, the second best trade would have been NZD, which was very negative, versus Franc, which is the second most positive. So, I mean, technically the Mexican peso was positive, but we don't trade the Mexican peso, or at least we don't the way, yeah, we don't normally trade it. Um, so we got the NZD against the franc. So you'd sell New Zealand dollars against franc. How did that trade do last week? Because that's the second best trade you could have possibly taken from the shift last week. And when you look at it, it was, yeah, really, really good. So this was a stellar trade, actually. Let's go ahead and remove drawings. And I actually have a trade going on it right now, but this is the current, this is what it did last week. So last week, this guy went from here to here, and that was a from start of the week to the end of the week, that was on 141 pip move. So this stuff works, guys. Like the shift is, and this is not like just, oh, last week was good. No, it works like all the time. Like I haven't found, I mean, I have found a couple of weeks that were not good. So be on your toes because there are a couple of weeks where this shift doesn't work. And I'll show you some of those examples because I have back tested those. But this, I mean, obviously we're going to keep doing leverage funds too, but I'm telling you guys, I have seen a lot more success with these shift trades than I've seen even with leverage funds. Not to demean leverage funds. It's just that, if there's a superior way to trade, of course we're going to talk about that. Um, yeah, this week was a little bit different with the shift trades. Um, so far, I mean, we've had a couple of trades that have done okay, but and like for example, the euro franc and pound franc are now doing well, but initially they weren't doing well. In fact, stopped out, right? So I get that. I know that feeling. So NZD franc, this is a short. So this was a short last week. Yep. Okay, so I'm gonna take a picture of this. And let's go ahead and save this one. Let's put this in my screenshots. NZD CHF. Perfect. And we'll go put these over here. Oh yeah, and the week before was the NZD franc as well. So it was 2 weeks in a row. You had the NZD franc. Let's go ahead and insert this. Insert. Let's do oversells. Let's put in browse NZD franc. Where are you? Right here. Okay, got that. Let's put this in. So I've been just monitoring the top two trades. I know I should probably monitor the top six, just like we do with leverage funds, but it's just so much work and I need to get to it. I know, but I've been just trying to be consistent with just at least the top two, and the top two have been really, really good. So this week, what are the top two this week? Based off of shifts, not my top two picks based off the scanner, but my top two picks would be, let's actually, well, still let's go to the scanner because the scanner will tell you. Oh, I gotta log in. I forgot I logged out earlier. 1 second, guys. Forgot I logged out. By the way, if you ever log out, the site needs to recache your login. So if you log in and hit refresh, it should recognize you now. So if I go to the scanner now, yeah, it's good. Yeah, it recognizes me, so I'm good. Just a little side note there. Okay, so if you just go by shifts, what are the biggest shifts? So if you look at the long side, biggest shift was the Aussie dollar at 3.25. And then the two biggest shifts are actually the pound Aussie and euro Aussie this week. So these are your two biggest shifts. Okay. So those would be your two best trades. As far as shifts go, obviously my two best picks this week are the pound franc. They're actually the runner-ups. So the pound franc and euro franc, those are my two best trades. And I've talked a little bit why those are my two favorite trades. Um, just because the sentiment lines up with the actual signal. And those trades, I believe, is, pound franc, I know for a fact's doing good. Euro franc, we'll have to go take a look at that one. I don't know how it's doing, but the pound Aussie and euro Aussie, I know they're not doing as well this week. The shifts are not as big. And that might be another thing too, Lee. Uh, so the shift trades this week have been um not as big, right? Like, if you go back and look at the journal here, you can actually see these shifts this week are kind of tiny. Like, you got a 3% shift here, almost three here, not even a 1% shift negative here. But then you go look at last week, you had almost a five here. And then on the other side, you had a minus almost eight. So the shifts were a lot bigger. And it does seem so far, at least in theory, we need to test this more, but it does seem like the bigger the shift, the more likely the signal is to be successful throughout the week. Um, and there's a few other examples that would confirm that too. Like, you right here, you've got the NZD. This is now 3 weeks ago. The NZD was almost 14% negative, and then you had the franc, which is almost 13% positive. So the NZD franc would have been a really good trade to take that week. And sure enough, it was like 111 pips made right there. So definitely a good trade. Okay. So pound Aussie, this is the top trade to take this week based off of the shift. Okay. Another good one would be the Euro Aussie. This would be another really good shift trade. This one's actually come back up to basically where it started. Well, actually, I guess the market started here and is now here. Um, I'm thinking this one's probably going to come down by the end of the week. Again, it did go down, it's come back up. I'm assuming that this is probably going to find its way lower by the end of the week. We'll see though. Couldn't say for sure, but that's what I'm expecting based off of the shift that we've got. So, but let's actually look at some of these other back tests. Let me actually plug in these results. So this was a plus 87. Oops, I need to finish. No, that's good. Plus 87. And then this was a plus 141 right there. And then let's see, do these include? Yep, they do. Okay. So it's got so far just taking the top two trades over the last 7 or 8 months would have rendered a 76% win rate. So that's pretty darn good actually for a week-long trade. Average winners 101 pips, the average losers 80 pips. Yeah, pretty darn good. And you can kind of go back and see each week. Like last week, both of these were perfect trades, easy to win. Um, Start of the week to the end of the week was pretty much positive the entire way. Same thing with this week right here, pretty much positive. A little bit of a downer right here, and then it ended positive. Middle of the week, it came back in our favor. Same thing right here, positive, positive, basically the entire week. This one had a midweek pullback and then went in our favor right here. This one actually was probably one of the worst winners I've seen because it actually went against you all the way until Wednesday. And then by the middle of the week, it just went boom, big time in your favor. So I've seen some like that. This one's about as perfect as they come, though. This is the other trade you would have taken. So this one made 261 pips, and it was basically just a move directly in your favor, like hardly any resistance, just basically went in your favor the entire week. Um, so yeah. Okay. Anyway, so you can go back. Most of these are winners. There's a few losers in here. Yeah, I don't know if you can go back and check it out, but pretty much all of those have been winning weeks, just taking the top shift trades. Um, and that's what gets put into the scanner here when you're looking at the shift each week. So what we're doing is I'm still taking the leverage fund trades, but I'm also taking the top six. I'm taking the top six shift trades as well, just because I've seen a lot of success with them and I like the back test. You don't have to do that. It's just something that I'm making available to you, and I'm giving you a somewhat appropriate stop loss if you want to take those at the beginning of the week. So, I haven't made any stop loss adjustments this week so far. Everything's just been the same hard stop. Um, yeah, I haven't done any adjustments that way yet. Um, yeah, I thought about doing it yesterday, but no, I felt yeah, I still feel comfortable with where they're at. Some of them, like like the pound franc and euro franc, those two just hit their stop losses. Unfortunately, it's like I said, it's really unfortunate because those two went in our favor and like they went in our favor later. Like this euro franc here, you can see it started here, went against us, unfortunately stopped out, but would have been in our favor by now, or at least maybe this one you'd still be down slightly on, but the um pound franc though is really looking good right now. That one's looking good. Yeah, that's where I'm at. Three of my shift trades hit their stop loss at the start of the week. Like I said, I got back into most of these trades through price action setups, but yes, as far as the weekend trades go, that's exactly where I'm at. Yeah, so I'm not arguing that at all. No way. I'm with you. I'm totally with you. That's where I'm at. One of the shift trades this week doesn't appear in the spreadsheet. Um, well, so if you look at it's actually from the scanner how I found these. So if you look at these shifts here, as you can see, here's your top shift on the pound Aussie, then you got the Euro Aussie, then you got the pound franc, Euro franc, pound yen. Those are five. But then when you come down here and look at the Aussie dollar, you can see it's 3.25. So that's where the Aussie dollar came from, is the fact that it had the next, it actually fits into like third, no, fourth place. It's the fourth best shift trade is the Aussie dollar. That's where I got it. Yeah. Yep. Yeah, great question, Lee and Bill. Let's see, any other questions that I missed? Roger talking about that pound Aussie approaching resistance. Yeah, yeah, definitely. Makes me wonder if it's gonna head down. Um, but we'll see. You know, it is definitely approaching some supply. We'll see if it follows through and continues lower. Again, it has till Friday until this trade opportunity is over, and then we move on. But yeah. Okay, any other questions on these trades, everybody? So, like I said, the game plan next weekend is the same. You know, if you're the, and this is by the way a great person to be. I do not want to diminish this at all. Okay, so hear me out on this. If you're the type of trader that just wants to take the passive 6 or 12 trades a week, amazing. Okay. If that's all you want to do, that's great. So I'm with you, and you guys, your results are the same. I actually think the trailing stop, not doing the trailing stop this week has really helped as far as helping everybody on the same page. Because like Lee was saying, three of your shift trades have closed. I'm same thing. Same thing. Three of my shift trades have already closed. I still have three open, and I'm waiting for those to continue to play out throughout the rest of the week. Um, and we'll see how they end up. Um, let's see. And then I can't remember where I'm at. I'll have to go check on the. Actually have that account pulled up over here. Let me see here. Um, the I have my account with all 12 trades. Let me pull that up. So yeah, I have CAD franc, or that might be a different trade. Sorry. NZD franc, pound franc. But that's on it. No, that's different. Sorry. No, no, no. I'm looking at the wrong thing. Sorry. That's a different account. Okay. Here we go. So yeah, NZDN, NZD CAD, pound Aussie, Euro Aussie, Aussie dollar still got going. Yeah. And yeah, some of these would have actually closed out had we had a trailing stop, but I think for me, I'd rather keep things going rather than having the trailing stop unless I move that stop loss throughout the week, which I have not done, which has helped a lot of us have the same results during the week. Nice. Yeah, you're that guy, Lee. That's awesome. Lee H. Yep. And then Roger says, with my work schedule, the weekly trades and daily sentiment trades are what works. Yeah, no, totally. That's fantastic. Which, by the way, the sentiment trades have been doing good. I need to close mine tonight. That sentiment strategy has been doing pretty good. Last I checked, it was doing pretty good. I need to put in my results for tonight. Um, yeah, Lee, you're also doing the sentiment strategy and you're really liking it. That's good. Nice. That's been a nice little system too. By the way, for those of you that don't know what that is, we for the last like every other week, we're doing a sentiment trading class. Um, First one we did was on October 4th. So if you want to go back and watch that, it's on October 4th. We did one last week. If you want to go watch that, we'll do another one next week on Wednesday at 8 p.m. Eastern. I keep track of my sentiment trading results in the journal. So if you want to actually come in here, if you click on sentiment, daily sentiment index, um, or the daily sentiment, this is where I've been keeping track of my personal results with the sentiment strategy. So if you kind of want to follow along with what I'm doing, I've been posting my results here each night. So, and I promised you guys I was going to stay consistent with it last week, and I have. So you can come in here and actually see that I have been doing it. I have been taking these trades and doing it. So yeah, there is a basic video. The most basic one I can give you is to go back and watch. If you go to the calendar and go to October 4th, let's actually do it together real quick. If you go to October 4th, um, yes, thank you for holding me accountable, guys. It's good. Well, it goes both ways, right? Definitely goes both ways. But yeah, if you go to October 4th, um, and then click on the October 4th, you can see the three classes we had on October 4th. This class would be a great place to start for sentiment. Okay. So Lee H, you're the one that asked that question. So go ahead and uh, watch that class. That would be a good one to start at. And then we did another one on October 18th right here that you can watch. Let's see. Lee says with sentiment strategy, if you do two trades and one wins and one loses, how many trades do you do the following way? It depends on if the winner covered the loss. If you made enough money on the one winner to cover the losing trade, then just go back to taking just the top one trade the next day. But if you lost money, like let's say you had one loser and the loser was bigger than the loser was bigger than the winner, then I would take four trades the next day. That's what I would do. I would take the top four. But again, you never go over four trades. You just take four trades until you get a solid win out of it. Yep. Yep. Exactly. So, all right. Well, sweet guys. I think this is good. So this weekend the game plan is to take the either the top six leverage funds trades if that's you, or if you want to take the top 12, go ahead and take the top 12. It's going to take you a little more time to put in those 12 trades on the weekend, but you're going to need to put in, adjust your lot size. I typically do 0.25% per trade if I do 12. So make sure that you're doing that. Oh, I appreciate that, Lee. By the way, the video on the scanner was excellent and the explanatory notes are a big help. I'm very glad to hear that. It's very helpful. Yeah, and yeah, this week, like I said, on the scanner, two best trades of the week, pound franc short, a euro franc short, those seem to be the best directions to look. Next week we should get more signals depending on how big the shift is. Um, yeah, totally. That's awesome. All right, guys, well, have a fantastic evening. Thank you for coming, and we'll see you guys in the next webinar.